Imagine having Warren Buffett's brain in your pocket. The Oracle of Omaha, worth $150 billion, is about to retire after 60 years of building wealth. But here's the thing most people don't know. His advice for beginners with just $1,000 is completely different from what he does with billions. And it could change your financial future forever. First, let's address what Buffett actually said at a 1999 shareholder meeting when someone asked how to make billions. His answer? Start with a snowball at the top of a very long hill. That snowball is compound interest, and the hill is time. If Buffett were starting today with just $1,000, he wouldn't be buying Apple or Coca-Cola. Why? Because his secret weapon isn't available to billion-dollar funds. The ability to invest in overlooked, smaller companies where institutional investors don't bother looking. Here's exactly what Buffett would do with that $1,000. First move. The S&P 500 Index Fund ***. Buffett's number one recommendation for everyday investors isn't complicated. Put 90% of your money into a low-cost S&P 500 index fund like the Vanguard S&P 500 ETF. This is the exact same advice he gave for managing his own wife's inheritance. Over the past 50 years, the S&P 500 has averaged 10% annual returns. That means your $1,000 could become $2,594 in just 10 years without adding another penny. But here's where it gets powerful. If you add just $100 every month to that initial $1,000, you'd have over $21,000 in 10 years. Second move. Start your research edge ***. With the remaining 10%, Buffett says he'd start researching companies alphabetically, literally starting with the letter A. He'd focus on small-cap companies trading below their intrinsic value, businesses that large institutional investors ignore because they're too small to move the needle on billion-dollar portfolios. But here's what separates winners from losers, according to Buffett. Rule number 1. Think in decades, not days ***. Don't check your portfolio every day. Buffett says if you bought a farm, you wouldn't get a quote on its value every morning. The same applies to stocks. As he told a Harvard MBA student who was optimizing his resume, that sounds like saving up sex for your old age. Stop waiting for the perfect moment. Start now. Rule number 2. Never panic when stocks drop ***. Buffett's blunt advice. If you're gonna do dumb things because your stock goes down, you shouldn't own a stock at all. Market drops are buying opportunities, not selling signals. The stock market transfers money from the impatient to the patient. Rule number 3. Pay off high-interest debt first ***. Before investing a single dollar, Buffett says if he had debt at 18% interest, he'd pay that off immediately. You can't outrun compound interest working against you. Now, what about today's market in 2025? Buffett has been building record cash reserves, now sitting on over $277 billion, suggesting he sees potential market turbulence ahead. He's predicting possible market bubbles and warning against speculative stocks. His advice for 2025? Stay focused on stable, quality businesses with strong fundamentals. Prioritize broad-based index funds over individual stock speculation, and maintain liquidity for when opportunities arise. He's also expanding internationally, particularly in Japanese trading companies, showing that even the Oracle of Omaha is diversifying beyond American markets. The brutal truth that Jeff Bezos once asked Buffett, "Your investment strategy is so simple, why doesn't everyone copy you?" Buffett's answer? Because no one wants to get rich slowly. Your $1,000 isn't about getting rich tomorrow. It's about starting that snowball rolling down a very long hill. The question is, will you plant the tree today so you can sit in its shade decades from now? Your action steps today. 1. Open a brokerage account if you don't have one. 2. Invest in a low-cost S&P 500 index fund. 3. Set up automatic monthly contributions. 4. Then close the app and don't check it for a year. Remember, Buffett's best investing period was when he had the least money, because he could be nimble and take calculated risks. Your small portfolio is your advantage, not your limitation. Like this video if you're ready to start your snowball rolling. Subscribe for more wealth-building strategies from the world's greatest investors. And comment below, what's stopping you from investing that first $1,000? Let's build wealth together.